Hi, it's Peter Temple for February the 1st on Monday. This is the market report. I want to start with the NYSE today. I think this is going to be a really important week. I thought it was going to be last week, but this is going to be the week. We're going to have turned down sometime this week. I don't have an exact day for you, but the structure is shaping up so that our turn is going to probably be in a range. I want to start with the bigger picture. And this is the New York Stock Exchange, so this is the big elephant in the room. So if we go back to May, April this year, we had a topping and came down in what I called at that time a first wave. And I mean, this is the contentious one. I could call this either way, but actually when I did my blogs, I actually saw a first wave up in here, a double two, a third, and a fourth here, and then a long fifth, and that's a typical first wave down where you have a fifth wave that is the same length as the other three put together. So that was where we started, and I had a 1 here. We had a 3-wave up A wave here, and from that moment on I said, well, this is going to be a wave that is not going up to the top because it is obviously corrective, and that's what we saw here. So that was our A wave, our B wave, and our C wave, and this is called a flat when you go up in 3 waves and come down in 3 waves and then go up in 5. So we were expecting a flat, and we got our 5 waves, except that the 5th wave here did not reach the top, and we had what I called somewhere in here a truncation. I wish I'd caught it at the time, but you can see the subwaves in here, they're just a little crushed up at the top and it didn't get up there. So I've called this a truncated wave, and this would be our second wave. So we go to 1, 2, and this is the beginning of a big long third wave. So this would be wave 1 here. And we've now had wave 1 down, although this is not a motive wave. It is a corrective, but if it's truncated, again, this one is crushed. And this is what makes this wave so difficult, because it really breaks all the rules. And once you get a truncated wave, which is extremely rare at a very high degree, then you're kind of guessing on this first wave. I'll tell you that once we get 5 waves down, that determines a new trend for all you non-E Elliott wavers. That will determine the trend. So this is a really important wave down that we're going to see. So we've got a 1, 2, and 3, and we've got a 4 that's retracing here. It's obviously a corrective wave. It is an A, B, C, and I'm going to jump in a little bit tighter and take a look at that. So it becomes a question of how far this is going up, and again, where you measure the wave. So I've got a 50% line here, but of course if you take that from what we think might be the top, well, there's a 62% there, or is that the top, this point here, because it should have been there? We don't really know. I don't know how to quite measure this because of the truncation. So we're guessing a little bit that way, but the overall trend is down. We're going to see this wave here turn over this week and head down again. Now let's look at the S&P 500, and we're zoomed in here. This is a 30-minute chart, so that we can see the wave down that we've had, which I'm calling a first wave down here, and you can see that it's crushed up at the top. This was a smaller second wave, and we've got a third down to here, and then a fourth. Again, it has the look of a first wave because it's got a very long 5th wave, and that's sort of typical. It also could be a regular. It's very hard to figure this out because it's really not a good motive wave because of this problem we had with the truncation. So that then becomes a question of where we retrace to. So we've had, as we expected, an ABC wave up. We had 5 waves up here, although this is not motive. This is a corrective because there's no second wave. So we've got a 1, 2, 3, and then another weird little contraption here. So we've kind of got 5 waves up, but again in a corrective manner. So you would count this an A, B, C, and then we've got our bigger A, B, and we're expecting the C up here. So there's a couple of ways to measure this because we don't know the length of the wave. You can always extrapolate by taking your fib tool here and extending it, and you can see that if I go up to the top here, that's 1.6 of that takes me up to here, which is actually also the 62% retrace point from the top to the bottom. So that is the upper end of this. This is the previous fourth wave here, which is what we could be correcting to. And in fact, if I was to do the same extension off our first wave, our little first wave of this C wave, that would take me probably up to around the middle here. So somewhere in between this fourth wave and the 62% level, we're going to turn over. So on Sunday, what I'm expecting tomorrow, we've just finished the third wave here. And if I zoom in a little bit further, my numbers are probably going to change. But we've got a first wave up. We've got a third wave here. I'm expecting us now to retrace to about this level. Here's our previous fourth wave of the third. So Sunday and Monday probably, this was a very large wave here as a second wave. This whole contraption in here. So I'm expecting us to come back to about here. It's probably going to take us through Monday, and then we're going to head back up and finish off this wave to wherever we expect to be, either up the top here. So that's our operation. If you're playing ES, the futures, you can expect to go down on Sunday, and then we're going to be heading back up to the top here. I'm going to be around all week, so I'm going to be able to help you with where we turn over. If you are an Elliott waiver, this is the prime place to get into a wave down. So people might argue, gee, I didn't know if this was the first wave or not, and it's always difficult. I stay away from first wave because if I don't know, and I didn't know because this was a truncation, which is rare, then you're only losing 38% of this wave, and when you get 5 down and you get 3 up, this gives you at the 60, I think 62%, you're not missing very much here for the lessening risk of getting in and knowing that this wave down is going to be, if it's a third wave, it's going to be 1.6 times the length of this. So over 1.5 times the length of this wave, which is a very, very nice run. So that's why we like to find the second wave and get in for the third, and that is a typical Elliott wave entry point. So it's going to be an interesting week this week. Stay tuned. I'm going to be around, and we'll see what happens. An interesting next few weeks, obviously, because this wave down, no matter what it is, will signify a trend change. Here's a look at the euro, and if you've been around for any amount of time, you know that I've been following the euro very closely because it is actually running contra to the U.S. equities. So when the euro goes down, the U.S. equities go up, and it's been doing that right along this whole stretch, although it hasn't gone very far. We're in this great big triangle. And so what we had was an ending diagonal down here in December, which bottomed. And then we had this ABC. It's actually up in 5 waves, and so it was a little bit contentious counting it this way. It really has to be an ABC, but again, it's 5 waves up to a previous fourth almost. So it suggests we either are going to come down to the bottom or we're going to head up to the top. I think we're going to come down to about here, which is the 62% mark from the top, and then I think we're going to head up. This wave here, I said we were going to do this E wave, and we did that. I caught that going long, which was good, and I caught most of this E wave down here. And the way it's turned out, we've had a first here and a third, and we're going into a fifth now. We're in a fourth, which should retrace a little bit higher, probably on Sunday, and then we're going to head down here into a final wave. Doing the measurements, it looks like this wave is really just going to come down to this point, and that's why I'm suggesting that as the U.S. equities top in this fourth or second wave, we don't know quite what it is yet, the euro is probably going to turn and head up. I'm expecting the euro to head up and the dollar to head down as the U.S. equities head down. So it's been pointing that direction, and I've been saying that for quite some time, sometime way back in here, that's likely what was going to happen, because we're finding that Prechter's all one market seems to be the modus operandi for the moment, so that everything is moving together. You see all of the currencies are setting up together. The The Australian dollar has bottomed, the Canadian dollar has bottomed, and they're all heading up in what seems to be a first wave of one degree or another. So we're looking at that as being some great opportunities to be able to judge what the equities are doing at the same time that we see the currencies moving in the opposite direction. So that's it for the euro. Just a quick look at the chart for oil. This is a daily chart. As I had said, we're in an ending diagonal here. 1, 2. This is a big long third wave, and I'm expecting the fourth wave to go up somewhere into the $35 range, and then we'll drop down into a fifth wave. I'm expecting, being in Calgary here, which is the oil capital of Canada, that we're going to get down to about $10. It's as somebody was saying to me, that the downtown core, the mood is black, oil black, and this is going to be down here for quite some time, I think, and then we will get a bounce. And because the market is coming down, demand, the general market, the equities are coming down, of course, demand is going to drop through the floor. And so even though it's going to be getting colder, and I talk about that, you'll find more information about that in my forum that I'm just getting up, I hope, this weekend. That we're going to probably not see a huge bounce here, but an ending diagonal always goes back to the top of the ending diagonal. So we will get a bounce up. When that's going to be, I couldn't tell you. It's going to be, I think, quite some time before we get down to the bottom here. So that's oil. And my last chart for today is gold. We'll make this very quick as well. This is just a continuation of what I've been saying. We had an ending diagonal here, and so we're coming out of this ending diagonal in what looks like a motive pattern. So this I put this as a second wave here, another second wave here, and we're into a third wave now, which should keep going. What you want to look for is getting past this upper trend line, which pretty well confirms that we're out of this ending diagonal. Gold should head up quite a long way. We're expecting it to get up to the 62% point here. I'm into a 3-day chart, and you can see that that's quite a distance. This is on GLD, getting up to about 150 or so, 153, and I think that equates to about 1600 in the actual gold. If you go look at gold, you see it's going to get up around 1600 here. This is a counter trend move, so it'll go up probably in 5 waves, but then it's going to head back down. It'll go up in 5 waves for the A wave, and then we will have a B and a C up to the top here, and then we're going to keel over once more and head down in gold to about 750. So we've got a long C wave to go. So we've had a long A wave down, a B wave coming, and a C wave down. So if you're going to be buying the real thing, gold for the future, you want to get it when it's in the C wave at the very bottom. So it goes to a previous fourth. More about that at a later date. Anyway, that's my market wrap up. Going to be an interesting week for the equities this week. So good trading. I'm going to be around for sort of a play-by-play as we turn over.